Stephen, you're reporting RSA half-year results for 2016. What stands out? What are the highlights?
You know, it's a really exciting time, I think, for RSA and the people associated with us, because the company, having really successfully completed a turnaround in the last couple of years, is now accelerating and I think on a path towards our best-in-class ambitions. And we have a really excellent set of half-year results to report.
Operating profit is up 20% on the same period as last year, and you're also reporting strong underwriting profit. What's driving that?
Well, we were in the good position of some very strong recovery trends and then growth trends in terms of our profitability when we reported last year. And I said at the beginning of the year we raised market expectations considerably. We thought we could do a lot better. We set out some demanding new targets of best in class. And here we are 6 months further on, and again we've beaten external city expectations by a very big margin in this first half, and in a very high quality way. So as you say, underwriting profits up something like over 70% to an all-time record for RSA, and that's despite bad weather and, if you like, the balance of luck in insurance going against us. The quality of earnings is fantastic. The earnings per share are up considerably. The dividend is up even more. You know, this really is an excellent set of results.
You touched there on challenging market conditions in general. Competition amongst insurers is tough, and also there's a lot of market volatility, isn't there, following the UK decision to leave the European Union. So what are you doing at RSA to manage all that?
Well, as you say, it's a tough external environment, and the essence of our plan has therefore always been about self-help. We have recovered, we're growing our profits fast, we're aiming to our best-in-class destination without help from the outside market. Economies are growing slowly, therefore our customers aren't demanding more insurance, and so our top line is relatively flat, and we're having to serve them better as technology allows us to reduce our costs, improve our underwriting, and produce much better results for shareholders. You mentioned Brexit. Brexit, of course, I think was a regrettable conclusion in the UK, but ironically for RSA, it's probably, at least in sterling terms, a benefit, because something like 70% of our profits are earned outside the UK, and so given the depreciation of sterling, our profits going forward will be significantly higher as a result of Brexit. And it's of course too early to know the other impacts of Brexit in terms of growth in the UK, any other structural reforms and so on, but I think RSA will be in good shape, notwithstanding the market challenges.
So RSA in good shape. Now, you keep mentioning best in class, and in the 2015 full year results you said that RSA wasn't just going to be in the pack, it was going to be best in class. So where are you with that?
Well, we have made, I think, an excellent down payment in our journey to best in class with today's results, because we have gone from recovery to producing the best first half underwriting results in this company's history. Now, we think we can do much better still, and all of the activity that's going on intensely right across our company is designed to keep momentum up, to make sure we keep beating city expectations and aiming for what I think our company can achieve. We have 300 years of history. We've been an outstanding insurer across all those periods. We're focused on our strongest businesses, and we're determined to do a really good job.
Now, improving performance has also been a key focus of recent results announcements, hasn't it? What initiatives are underway to make RSA focused, stronger, better?
We've completed the strategic focus of RSA. So now the company is organised around its strongest businesses in the UK, in Scandinavia, in Canada. The UK includes Ireland and some parts of Europe as well. And based on that strategic focus, our balance sheet is in terrific shape, stronger again as we report today. We're improving performance. There are 3 levers we're pulling. A vast range of initiatives to serve customers better, essential in today's world as customers are ever more demanding and it's competitive, as we've discussed. We're being better underwriters. That's what insurers do, is price risk accurately and thoughtfully, and we're improving substantially there. And then finally, in the modern world, every single company needs to be as efficient as possible. We need to get our costs down in order to compete successfully in a competitive market, and we're doing that as well. So across customer, underwriting, costs, big improvement programs, several years to go until we reach their potential, but the momentum is high.
At first glance, a lot for shareholders to smile about, but what next? What can investors expect in the next 6 months?
I think the really pleasing part of today's results is that the very strong gains in profitability, which of course have allowed us to make a strong dividend increase, they're earned in a high quality way. In fact, you could argue that our results were held back by bad luck, and therefore there is every prospect that we can continue to significantly beat the city's expectations, and indeed that will be enhanced by the foreign exchange benefit from sterling's appreciation in the second half. So we're feeling sober about the market environment. Of course it's going to be a struggle, but we do believe that RSA's self-help measures will allow us to continue to produce some very good results.
Stephen Hester, CEO of RSA, thank you.
Thank you.